Good morning, it's Lane Clark here from Beta 2 and it's Tuesday the 7th of July. Very quickly, let's talk about the markets, what's been happening and how we anticipate moving forward in regards to portfolio biases. Now, I won't go into the Greece situation in any great depth. We have covered it an awful lot as of late. There are a cacophony of headlines coming out day in, day out in regards to that particular situation. But what I will cover is what else is happening in the markets, because some are actually speculating it's the calm before the storm. Now, what do I mean by that? Well, like I said, we all know about the Greece situation, but really it's stealing the headlines from elsewhere. Now, look at China. China is an economy that really drives the growth of many other economies, particularly your export-led economies like countries, Australia, Canada, etc. Now, right now, the Chinese economy is beginning to struggle. Some are speculating the bubble could possibly burst. And what we're seeing is dramatic depreciation in the value of Chinese stocks. Now that's bad in itself. If you like, that's an alarm bell or a warning signal. But it's the knock-on effects that come with that. So with the Chinese stocks now in bear territory, we're also seeing dramatic slumps in particular correlated assets. Now, I mentioned Australian economy earlier, so I mentioned the Australian dollar, bringing us onto the FX arena. Australian dollar is definitely the worst performing currency both today and over the last week. Now, that's surprising considering what's going on in Greece, and people, novices to the game if you like, would anticipate that possibly euro would be the weakness, but there's no two ways about it, it's definitely Australian dollar. The classic example is this: when the markets opened on Sunday night and gapped, as soon as they opened Asian trading, and we're talking about the euro now, and I know Sam did discuss that yesterday, the Australian dollar actually gapped more. It's getting weighed down, it's seen as a risk-on currency, a higher yielding currency, so a situation like Greece will affect it, but as well as that, China is heavily weighing that down. Now, as well as that, let's look at another commodity, another asset class that people trade very frequently and keep a very close eye on, and that's oil. And again, the declines in that have been dramatic. So right now we have got the Greece situation, we've also got the Chinese situation. We're seeing big drops in currencies like Australian dollar, we're seeing big drops in the oil market. Things don't look particularly pretty out there, and some are saying it's like the situation before Lehman Brothers, maybe a month before the actual situation really started to unfold and start to become very, very dramatic. And hence why some are saying it is possibly the calm before the storm. Now, how are we attacking that? Let's use the FX market as an example. Right now, and over the last couple of weeks, as you well know, we have been looking towards euro weakness. Now, we started to taper that off at the back end of last week, which we felt made sense both from a technical perspective and also an event risk perspective going into the weekend's referendum. We're still relatively neutral on euro now. So we have been selling up, but we're relatively neutral. We're selling it against the dollar, we're selling it against the yen, but we're actually looking for euro strength in things like pound, Canadian dollar, Australian dollar. Overall, we are relatively neutral. So what are we looking for? Well, we're definitely looking for some dollar strength, that's for sure. We're definitely looking for yen strength, the classic risk-off currencies. And we're looking for weakness, not so much in euro, but in Australian dollar, and it's been like that for a few days now, Canadian dollar, and the Great British Pound. So an ideal day today sees a risk-off investment climate with dollar and yen very, very strong, and your perceived risk on currencies like Australian dollar, Canadian dollar and pound to sell off. That's where we are in regards to our bias. Euro situation could change, but like we said, with what's going on right now and the plethora of announcements that do get released on a regular basis regarding it, some would say it's a shrewd move to be relatively neutral in euro and try and take advantage of market movements elsewhere. So for today, that kind of wraps up where the markets are. It wraps up where we are in regards to the FX arena. I guess it just leaves me to say, have a good day trading, and no doubt we'll speak again tomorrow.